Alrighty guys, welcome back to the best investing money management channel on YouTube. In today's video, I want to talk about, is it time to buy the dip? Right now, there's been so much speculation in the market and a lot of people have been freaking out. And I just want to answer this main question of, should you buy this dip? So before we jump into this, you guys need to know some facts. So the first fact you guys need to know is this is the 9th time the S&P 500 has been down 25% or more, right, since 1950. So looking back, we had the 2020 lockdowns, we had the dot-com bubble, we had 2008, we had the 87 crash, we had 70 and 74 crash. We had all these crashes, right, leading up, to 1950. But this is the 9th time. But there is some things you guys need to understand. The first thing, looking at this chart, this breaks down all of the the crashes when it's down 25% or more. So looking at it, you'll notice these are all the crashes right here. We had a decline 28%, 36, 48%, 27%, 33, 49, 56, 33, 25. It averages out to an average of a crash of 37%. And the beauty of this is, on average, 1 year after a 25% crash, we have a return of 21%. So in 1 year, there's an average of a 21.6% return. And looking at it, there has only been 1 year where the S&P 500 was not up on the positive 1 year after a crash, and that was in 2009. On top of that, 3 years after, we look at a return of 36%. 5 years after, a return of 83%. 10 years after, right, a crash of 25% or more, we're looking at a return of 213%. So answering that main question right off the rip here, should you buy the dip? Absolutely, everybody should be buying a dip. Anytime the S&P 500 has crashed 25% or more, you should be buying, right? Right now, we're looking at a massive opportunity to buy, the S&P 500 at such a affordable price, right? The last time this thing was, around this price was all the way back in here in 2020, bringing a solid opportunity to buy in on some affordable pricing. On top of that, guys, we're looking at just a massive opportunity for general stocks that are selling off lately. We have a company like Google, which brings in, billions of dollars. The stock has sold off, right? Let's pull that chart up. So, I definitely think with companies like this, there is even a massive, a more of an opportunity, because now instead of a 25% sell off, these have sold off 30, 40%, and we're still looking at a company that brings in a lot of money and isn't going anywhere. Right now, the market that we're in is just people aren't spending like they used to a couple of years ago, and pretty much it makes sense, right? We have high inflation, we have high interest rates, which makes getting loans more expensive, so people are less likely to take out loans just because no one wants to pay high interest. I just think right now we're just in a weird market. And I think looking back a year, 2 years, 3 years, we're going to be wishing we would have bought more of just the S&P 500 or just general stocks, right? Looking at the S&P 500 chart, if I go ahead and zoom out, right, you'll notice just these massive dips. This was that 2020 crash right in here. Boom, we had this crash. Boom, in here. Just massive amount of opportunity, and you have to have that long-term mindset. I think to be successful here, you can't look at the day-to-day price. You just have to invest in dollar cost average, invest on a weekly, daily, monthly basis. Just be consistent. The best thing I always like to say is investing is like going to the gym. If you go to the gym one time, that's great, but you're not going to get in shape. If you go to the gym 2 times, you're not going to get in shape. But if you go on a consistent basis, you're going to eventually get in shape as long as you're consistent. Investing is the same way. So guys, that is it. I hope you guys enjoyed it. I know my hair is absolutely crazy, but we will see you guys later. Remember to stay happy, guys. Stay positive. I hope you guys have a great rest of your day, and we'll see you tomorrow in another episode. Take care, everyone.